Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of AMC Entertainment, ticker symbol AMC. And so I am recording this on Saturday, November 22nd. And the reason I am recording this is because you guys voted on it. So thank you for participating in this poll. I will be covering Plug Power and Neo before the end of the weekend, but I did want to start out with AMC. I have to say, this is the one that I'm most excited to cover. I think there are some really bullish things in the chart, and one of those things, I don't know if you guys can tell, I gave little hints at what I would be talking about there. So let me know in the comments of this video or the comments of the poll what I was suggesting we're seeing in AMC. But yeah, so I am going to be diving into the chart. I also did want to kind of review some of my prior AMC videos just to kind of let you guys know where my head is with this. We've seen a pretty brutal 7 weeks. Maybe you'll remember that in a prior video, 7 count. Yeah, I mean, I think there might be something here. I think there are actually some bullish things in the chart I want to talk about, but at the same time, I've talked about that before and we're at all-time lows now. And so I really just wanted to review some of the videos, or at least the titles, the themes of prior videos, and just to kind of let you know where my headspace is moving forward. And so at the beginning of the month of November, I put out this video asking the question, will AMC history repeat? Implying in the thumbnail and in the video that I thought we could be seeing a pretty upsized move in November. And we've seen the exact opposite of that. That's been disappointing. Wrong there with that. But I think there are some things in the chart that could be telling me we're finding a bottom. So I have not lost all hope yet. I am getting close, though. I want to be honest with you guys. But there are also, some fun things going on. You got to have fun. It's just numbers and they're going down. You got to have fun with them. And so in this video, I talked about, light at the end of the tunnel. I think that we could be near it. There are some things looking back at history that make me think we could be at or near a bottom. Maybe the bottom's already behind us. So I definitely think there's some hopes there. But also, I put out this video, only 132 people, it looks like, saw it versus, almost 1,000 here, hundreds for this one. But yeah, I just put out my thoughts regarding the AMC filing, that we're voting on the having access to dilute the stock. And in my opinion, I think it's important that we do vote yes, because if we don't vote yes and the company needs money, they're going to do something like APE 2.0. And I think that was just a massive way to dilute the stock. So I think it's good that we do vote for it. It doesn't mean they're going to dilute right away. It just means that they'll have access to if needed. I think it's going to be needed. But if we don't do that, I think price could be going, towards $1, and then maybe we get into reverse split territory, stuff like that. And actually in this, and I believe in these prior videos, I had talked about wanting to see a rally before that vote. I believe it's on December 10th. And we haven't seen that yet. We've seen new all-time lows. So my next AMC video might be more along the lines of this one, and really just talking about what I see moving forward. And at that point, I would have lost a lot of conviction. I'm making this video now because I don't think that's the case. But I just want to forewarn you guys that, yeah, I mean, there might be some tough decisions up ahead. So I just wanted to be transparent with you guys. And also scrolling back some of the videos that I put out at the beginning of the year. Oh, actually, before I get to there, I put out this one, They Will Blame Us, talking about how, everything's red. There's so much panic, GameStop, AMC, Bitcoin, all of that. And they will blame us. So if something rolls over, but these other things go up, they will be mad at us. We will be like the scapegoats or whatever. I'm wondering if this video came out about 7 months too early, and that we could be seeing some volatile moves to the upside with the panic in Bitcoin and crypto right now, with AMC bottoming, GameStop being around 20, I believe. So yeah, I mean, I wonder if we could be seeing some massive moves to the upside, but I have no idea. And then also did just want to bring it back to these videos when I was doing Like the DD, looking into dilution, debt. In all honesty, I was being critical about the stock and the company. And, at that time, that was following dilution that occurred around $5 a share. We're now above that. I'm not going to get into it in this video because I don't think I'm there yet. But, where price is at now, it would have been better to sell back here and then buy back now, for example. And so, yeah, I might be putting out my next video might be more like these and just lay out what I plan on doing. In this video, I will be talking about what I plan on doing or what I am doing with the stock right now, with options right now. So I'm going to go over the chart, and then I will get into some options data that might be of interest to you guys, and then kind of talk about what I'm doing. So let me know in the comments, thumbs up if you do enjoy this. Also, if you're going to call me a shill, get it out. Let me know. I am just trying to share my opinion and trying to have some hope, but it's tough. They definitely don't say sell at the bottom, buy the top, and we are now definitely at the bottom. So, I want to be talking about that. I think we could be seeing some upside here. And I think that we're seeing that. I don't know if you can tell. This is the weekly chart. And we see 7 red candles. And to be honest, I was hoping that this week would be red. And I could not have asked for a better looking candle for the week. And so there are a few things about it. Also volume, lots of stuff that make me feel like we put the bottom in. And so one of them is we see 1, 2, 3, 4, 5, 6, 7 red candles. So that's a 7 count. Maybe it's superstition. Maybe it's psychology and just like pushing people to their limits. And they break after 7 and then, things go the opposite direction. I don't know. But this is a 7 count on the weekly. I was actually looking at this previously. Thought I was looking at the daily chart. I was like, 7 days in a row. It's like, oh no, that's weekly. And and so with that, we could be reversing. But I wanted to see, the candle be red for this week, so we would get that 7 count. And I also wanted to see some signs that we could be seeing a bottom. I think that we are seeing that with this hammer candle. We got this big wick to the downside, and we did see an increase in volume. That does suggest that buyers are stepping in, pushing this up. And to be honest, I'm not sure if this would be a type of capitulation with selling a lot, but that's being bought up, so it's pushed up. So I'm not sure exactly. I'm not going to get into the jargon of that, but volume coming in, pushing this back up, wick down, buyers stepping in below 219, below 220 where we closed at. So I think that looks good with the volume, 7 count, all of that. Some other things I'll talk about too with the RSI, possibly on the daily, on the weekly. Also do want to note that I am looking at this on the log scale. Doesn't really change too much on the short term here, but taking a step back, things are going to look a little different. And so I want to talk about the bigger picture, but I guess I should also mention this yellow line here. That is the 50-day simple moving average, and that is currently at $2.70. So I wouldn't be too surprised if we do see some resistance around 250, 270, somewhere around there. And also thinking about this, I forgot to zoom in on it for you guys, but I'll zoom in on it. Maybe I zoomed in too much. Nope, perfect. We got the max pain right here. So for the 21st, so yesterday, max pain was 250. We did close below it. This is the after hours price, but closed at 220, closed below max pain. Max pain looks like it's 250 for the next couple months. It is what it is. I don't think it's a big deal one way or the other. We're not unfamiliar with closing below max pain. We could have closed below 2, and we didn't do that. And so, not necessarily that it's a nothing burger, but this is not really standing out too much to me. If we start to get above 250, if we start to close on Fridays above 250, also with next week, by the way, happy holidays, happy Thanksgiving to you guys if you're American, if you're celebrating. If not, just hopefully you're enjoying time with family, all of that. But it's going to be a shorter week next week because of the holiday. Thanksgiving is on Thursday. And I think that things tend to get kind of wonky in charts on holiday weeks. And by wonky, I mean maybe go to the upside. So, if we start to close on Fridays above 250, maybe we could be getting into gamma ramp or gamma squeeze territory. So do look for that. Do consider that. But just coming back over here, I'm such a scatterbrain thinking about stuff. Yeah, 270, that's the 50-day moving average, simple moving average. So maybe there's some resistance there. Maybe let's lower it by a penny, 269, have some fun with it. You know, that level I was talking about, I'm not going to pull it up, but the other video, the thumbnail, 269 at the light at the end of the tunnel. We've broken below that, so that could be some resistance now. But if we get above there, we get above 3, maybe we could start to, you know, get the ball rolling, get going higher. But yeah, let's just take a step back, and I just kind of want to point out some things, because before I take too far of a step back, I need to note on over the past week, this is the weekly, over the past week, we hit a low of 205, okay? That's an all-time low. Split adjusted, all of that, 205 is an all-time low. Let's talk about that regarding history. Okay, so coming back over here, again, this is on the weekly, and I might actually just move those things so they're not in the way. What we can see over here, we bottomed April of 2024, hit, let's actually take a step back so we can really see. You know, that's new all-time low over there. What happened shortly after we hit that all-time low? And we started to bounce. And actually, let's zoom in here. So this volume's kind of obscuring that chart a little bit. So let's just do it like this. You know, what happened when we were bottoming there? Volume picked up. We started to go higher. And so, you know, we're seeing that currently. That volume's picked up. What's going on there? This past week. So, but yeah, with this big move to the upside, so we saw low the week that began April 15th of 2024. And that included, or would have included, April 20th. So happy 420 to us back then. But the low was 238. I knew that. We all knew that. What happened after that? Whoa. It went up to a high of 1188. And so let's just get a measurement of that from the bottom to the top there, 400% move. But at the same time, that wick was short-lived, up and down. You know, not great opportunity to take advantage of price being up there to trim a little, let's say, lower that risk, and then buy back lower, whatever you want to do. And I remember that level, I had a level marked, I could probably show it over here. That red line going right through it, I had it drawn up there. I didn't sell, I was just chilling, but I didn't even have enough time to think about selling. It was just a wick up and a wick down. There's just one wick up and down. And maybe we could be seeing that. And I meant to get this with the measurement. How many weeks did that take? I mean, I could just count. But that was about a month, you know. From the all-time lows to the top there, went up 400%. Even if it went up, you know, over to here, you know, coming back here, testing that as tops, up over 100%. So from the lows at 238 up to like $5, $6, somewhere around there, maybe we could be seeing something like that in the future. I don't know. But let's just say, you know, a range from around 100% up to 400% for, you know, that kind of move when we hit these all-time lows. Also, look at that RSI. This is on the weekly, the RSI there. And that RSI, let's see, there we go, all that stuff. That low for the RSI was 2582. So definitely in the oversold territory. Started to go higher. We took off. Okay, and let's just, you know, continue on back. And what we can see is over here. I think you guys will remember this. This is, you know, 2020. And actually, you know, we hit some lows over here. This would be all-time lows. March of 2020. And I'm not really going to spend too much time on this one because it wasn't that huge. But from the new all-time lows there, we went up 280%. Just in this short time frame. So in the span of about a month or two, you know, okay? But then following that, you know, we tested. So that low, that all-time low at the time, March of 2020, that low is 1057, split adjusted, 1057 low. Then over here in January of 2021, we hit a new all-time low of 1035, split adjusted. What happened after that? Well, I think we're all familiar with this. it went up from the lows here about 1,000%, then pulled back some, consolidated, and then continued up about 3,500%. Am I saying this is going to happen again? No, absolutely not. But am I saying that this happened after hitting all-time lows? Yes, that's exactly what I'm saying. And with that, what do we see here? Let's just looking at this on the weekly, taking a step back, taking it slow. What are we seeing? Okay, so over here, we see lower lows into those new all-time lows. Lower lows in the stock price, but then we see higher lows in the RSI. Even though it's very oversold over here, RSI, if I pull those numbers up again, was 1404. Here, 2228. So, super, super low, but this is lower lows. This is higher lows. That is divergence. And if we're getting lower lows in the stock price, let's just look over here. Lower lows in the stock price, higher lows in the oscillator, which in this case is the RSI or relative strength index, that we're getting higher lows. That's bullish divergence, regular bullish divergence. And so that kind of was suggesting, hey, maybe there's a bottom. And then following that, what did we see? We did see, as I pointed out, very slightly, a lower low in the stock price before this big move up. And what do we see in the RSI? We saw higher lows. And so with that being said, what's a lower low in the stock price? That's right here. And a higher low in the oscillator. It's right here. That's bullish divergence. And so we saw bullish divergence here. Okay, bullish divergence on the weekly. And then we saw, 1,000%. What did I say? Thousands? Let's see, from the low there, about 800% to the highs, about 1,000 over here, 3,000%. So, a lot of upside. Okay, so let's just consider that. And then now coming over here, what am I looking at? This is the move that I want. Let's just reevaluate that. Maybe there's nothing here. What do we see here? Lower lows in the stock price. And the RSI looks kind of flat, but it actually does look like it's lower lows over here. It was 2710. Over here in April of 2024, it was 2582. So lower lows here. So no divergence there, but we did see a nice move. Okay, and so now let's just come back to present day and kind of just think about, this and this. What are we seeing? Again, this is on the weekly, because that means that the response is not necessarily going to be super fast, if there is a response, and if it is a response in the direction that we want. But what do we see? The low over here, that'd be 245, I believe. No, 238, man. 245 was over here, I think. Yeah, that was March of 2025. And actually, that wasn't a lower low. That was a higher low. But we did see a nice move following that as well. 60%, nothing too crazy. For us in the meme stonk community, 60% is nothing. All right, so we've got over here, higher low. Okay, also higher low. There's no divergence, nothing to talk about. But now looking at this, even on this scale, what do we see? From March of 2025. This is, getting into, what is it called? Liberation Day, the tariffs, all of that. Lower low. What do we see in the RSI? Well, hey, we actually see a higher low. All right. So over here, we saw a low. Sorry, I might have spat on the mic there. Sorry about that. The end of March, we saw a low on the weekly. So this is more significant than the daily. There's more weight to it, but it might take a while for these things to play out. And so the end of March, we saw an RSI at 30. Right now, we're looking at it at 3270. So that's a higher low in the RSI, lower low in the stock price. What is that? Lower low in the stock price. We're at all-time lows now. Higher low in the RSI. That's bullish divergence. Okay. And then bigger picture, coming back to when we saw this big move in May here. That was a low at 238. And we just put in a low at 205. It's a lower low. What are we seeing in the RSI? Let's see over here, RSI 2582. Over here, 3070. We're seeing bullish divergence, and not just like two touch points or just a line between 2 points. We're seeing, a connection between there. So I think it's more significant. Lower lows in the stock price, higher lows in the oscillator, the RSI, and we're seeing that. That's bullish divergence. So I think that this could be really good. And so let's just think about this. I'm going to throw some numbers up here, put up some moving averages, and then I'll talk about some drawings in a second. But let's just think about this bigger picture. If this goes up 60% from the lows, where's that bringing us to? That's bringing us to like 130, somewhere around there, 125, or bringing us up. So that would be bringing us up to like 335, somewhere around there. Sorry if I scared you with that. Upside move of $1.28, 62%. But let's say we get, 100% move. That's happened in the past, could happen again. That would be going up by about $2.10, could be bringing us to around $4, $4.20, somewhere around there. That would also, if I zoom in on this without losing that, that would kind of correspond with the highs that we saw here in May of 2025, which were around $4. Yeah. So, okay. So there's that. Could be some resistance there because that was some resistance in the past. There was also support around there in the past over here. And so I could see it happening. But maybe we go up more. Maybe we go, what's 1,000%? Let's see what that looks like. That's around $23. And that would also be kind of bumping into the lows over here. I think I've talked about that before. So I think that could be happening. Is that going to happen next week? Is that going to happen overnight? No. But with the news of the shareholder meeting and us voting on dilution and stuff, that's kind of pivotal. And to me, I think that that's bearish. That's pivotal in a bearish sense. I think price could go down. But maybe I'm wrong. And maybe it's pivotal in the other way. Maybe there's some resilience that like short sellers, nefarious players, whatever, recognize, hey, this is it. This is the bottom. Start to cover or whatnot. Things start to go up. I mean, it could go higher than this. It has in the past. Let's see. What's 3,000? I think that's the highest one that I saw. That could be getting up to like $60. Maybe, 30 to $60, maybe let's say 20, maybe let's say 10. The high over here, that was like 12. Okay. That's up about 400, 500%. So let's say maybe this could be going in the next month or so, 2 months. Let's give us some wiggle room. Up to 12, maybe up to 60, but it would wick up and wick back down. So whatever you're doing, I think it's good to have a plan for that, unless you want to be a bag holder for another 4+ years. To manage risk. I think people get in their heads, I have to buy at this level and I have to sell at this level. In my view, everybody's different. Everybody handles emotions differently. Trim or dollar cost average in, buy as it goes lower, accumulate as it goes lower. And to be honest, if it's at 220 and we're talking about buying at 3, all this other stuff, we should be happy that it's this cheap. So if the thesis is buy in, over the past couple of years, 4 years, now is a gift. But, it doesn't have to be a buy everything all at once. It could be just slow, steady accumulation, whatnot. And with that being said, in exiting a position, it doesn't have to be all at once. It could be trimming at specific levels. Whatever stands out to you, you can pick them out. Trim 5% of a position, trim 10% of a position, or 20%, 50%, whatever it is, or 100% if that's how you want to do it. No judgment. We should not be shaming people for taking profits after going through this much pain and agony. I think that's totally fine. So you do what you got to do and don't give a flying F about what anybody on the internet has to say about it. You take care of yourself. You do what you got to do. I'm pretty tired of this stock. I think we all are. But I do think that we could be in a situation where it goes up hundreds, if not more percent. And so, yeah, there's some levels with that. And with that being said, I don't think there's too much that I wanted to go over with the daily moving averages, because those are all kind of dinky over here. Going up to like 250 to 3, kind of talked about those levels. So not really going to talk about them here. But I want to talk about is these weeklies. Maybe there's something here. So in yellow, I got that 50-day simple moving average. Then is that cyan? The light blue there, that's around $3, so nothing too exciting there, I know. But then when we get into, that's 309 to be exact, then we get into so that's the 50-week moving average. Then the 100-week simple moving average is at 378. That's right up here. So getting into 4, kind of talked about that. Could be some resistance there. Maybe we go up to these levels, get rejected from them, pull back. But then the next one, 200-week moving average. I kind of like that. That is around $29. And here it looks like it's at $28.84. It's going to change every day when new data comes in. But $28.84, $29, $30. Something exciting. Do I think that's going to happen overnight? No. Do I think that's going to happen in the next month? I think possibly it could. But I think the day after, it could be back at 5. I do think that, if it does really start to get above 4, it could stop at 550 or so. Got the consolidation here. That's been resistance. But there's really not too much above it, just this wick, We go past that with all this, built up frustration and energy and all that. Popping the cork off the bottle, could go flying. And then over here, we got this big drop. Is there much there that could be capping us? If we do go back in time, there actually is. So don't look at it on the short term and just be like, there's nothing here until we get up to like 30. We're just going to take off and go there. Note where that cursor is. It lines up pretty nicely with that 200-week simple moving average. That purple line there, around 30, 28, somewhere around there. So I find that to be pretty compelling. But if we do take a step back, there was a lot of consolidation over here, and the lows of that consolidation right around 10, 11 bucks, corresponding with the highs here, 11.88. So I think that we could be seeing some resistance there, but it could be that we blow through that and then we come back down and then find that level as support. And so one thing, thinking about this more from a psychological and prior experience, is that I might see like, 10, 11 bucks, 12 bucks, that's going to be resistance. So I'm going to place all my sell order. I'm going to sell 100% of my position. Let's say I'll sell 50% of my position at 10. Hypothetically, I'm not doing this. I'm not planning on doing this. But let's say I sell 50% of my position at 10 bucks, 25 more at 11, and then the remaining 25 at 12. But then it blows past those levels, goes up to 30. Dang it, I missed that. And then it comes back down to where I sold at, and it's like I didn't really make any progress. So that's kind of why I think trimming out is good. Maybe 10 to 12, 10%, another 10%, another 10%. So that's 30% of the position. And then you'd have 70% remaining to see, maybe it goes up to 20 and then trim 20%. And then that's 50% of the position. And then maybe it goes up to 30. And, I don't think there'd be much harm in selling, more. But you do you. I'm just playing out scenarios. I don't have any orders placed on this. But I am thinking about that. My average, to be clear, is between 8 and 10, 2 different exchanges. So I got 2 different averages, but between 8 and 10. And I personally will plan on trimming if I do get into the green, so that if it does come back, I can add more. And I can do that without exposing myself to more risk. So I can do that more comfortably. But at the same time, maybe it goes up to, hundreds of dollars, and then I'm just happy with that. And I retire, never make a video again. I don't know. Who knows? I don't think that's going to happen. But, just play out the scenarios. And I think that this could very well be getting up to $10, but I think it could go past that, maybe get up to 20, maybe get up to 30. but then get rejected there and then come back to 10 and find that as the new floor. That would be, in my view, an ideal scenario. But yeah, let's remove some of these moving averages. I'll throw up some drawings and I'll talk about some more stuff. And so just to keep it on this bigger perspective, I've gone over this. We got this consolidation there. That's going to potentially be some resistance. Kind of got that doodle there. This is on the weekly. So maybe what I want to do is switch this over to the daily. And we can just kind of, what are we looking at over here? And yeah, I mean, Friday's candle, look at that. That looks great. What happened on Friday? Went up 6%. I just got an alert. Something's happening in the crypto market, but I'm not going to pay attention to it. And yeah, nice green candle there. And volume was increasing into that. I mean, we got a lot of levels over here. So between 250 and 3, I've talked about that. We get up to 4, maybe we start to find some of these levels as a new floor, and then maybe we take off to up here. So, and this is in the range from like 10 up to like 30. I don't think that this is going to go to 100 or 200, at least not anytime soon. And fundamentally, my experience as a lover of going to the movies, to be honest, I have not been as much of one really since following like 2020. I just feel like there's been a decline in the quality. And, I think I've rambled about that a few times in some videos, but we can get into it in another video if needed. But yeah, so that's kind of all I really wanted to go over with the chart. I just think that, I think that there's a lot of upside potential, but we do have a lot of levels to get through. So we need to be seeing some volatility to the upside. And I kind of like looking at this on the weekly, kind of don't like having my drawings up there. And I kind of like this, the moving averages here. I think that this makes it very clear we have a lot of levels here between $2.50 and $4 to get above. Once we get up to like 5, maybe that's acting as support. Once we get up to 10, maybe that's acting as support. And then we could talk about the 20s, which I think maybe we could go through that kind of quickly, but then find 30s as resistance. So yeah, but let's talk about some options data. And so to do that, let's come over here. I'm just going to zoom out of this screen to 100%, just do the overview. And so this looks really good for the 21st. So this is just data from the 21st. And to be clear, in talking about options data, I am not encouraging buying or selling call or put options. You do whatever you want, whatever you feel comfortable with. What I have experienced myself in my journey as a trader is the data from options is invaluable, can really tell you a lot about what's going to happen in a stock, but trading the actual options, I feel like I'm 50-50. And when I'm right, I make some tens of percent, maybe 100%. But when I'm wrong, I lose it all. So I'll talk about some of the contracts that I hold that I think are interesting. And but yeah, just want to talk about the general options data, what I see that doing. And so this is the net call and put premium. But what we do see in yellow is the stock price, just a line chart of that, AMC stock. We see in green, following the stock price, that is the net call premium. So that suggests there's buying of calls. And in red, we see that line going down. That is the net put premium. That suggests the selling of puts. Both of those would be bullish. We also see the volume here increasing. That suggests buying. But it could also be selling. So, we have to look at the data and the days ahead. The data comes out before market opens. So, if I do scroll down, though, we can see the bear bull slider at 53% on the bull side. So whether or not we include that neutral, it is majority bullish. So I think that looks good. But we also have to consider the value of this premium that's traded. So net put premium came down by 48,000. That's not a huge amount of money as far as options go. For you and me, that might be a lot of money. Options, not a huge amount of money. Going up for the calls, net put premium increased by 138,000. That's a more interesting amount of money, but it's not like millions of dollars. And also, when talking about a stock like AMC that's very retail heavy, I think that any of this options data you got to take with a grain of salt. And what you want to see, what you want to pay attention to is big moves, vertical moves up or down, because that's going to suggest bigger buys. Whereas if you see it slowly, gradually going up or down, that's probably just retail, getting into positions. And, we tend to be wrong, retail, dumb money, sheeps following the herd, whatever. And but this is going in the right direction. So regardless of there not being giant spikes that are $1 million, we are seeing this trending in the correct direction. So I think that's good. And then if we go back, let's see just the past 3 days to give some perspective. We see stock price in yellow coming down, then it's starting to go up. So it's a change in trend. We see, the tops here connecting. That's a line, a trend line there. We've broken out from that trend line. So that looks good. And we see net call and put premium being kind of flat. At least, we've seen this kind of breakout in the net call premium. So that looks good. And then kind of a breakdown in the net put premium. So that also looks good. Well, let's just go back 7 days. I'm just going to inch our way back, see how this is changing. We see the calls being down here, so that's not so good. But we did see the stock price go down following that. So I think that's part of the past. Take it with a grain of salt. Things don't go up all the time. And if people were selling calls there, they were making money, or they were avoiding losing money, at least, as the stock price did go down. Go back the past 14 days. Saw some more stuff going on here at the beginning of the month. November did not play out as I was hoping. We did not get a Moonvember, but maybe we get a, let's see, Bullcember? I think that's what it is. Coming down here. Going up. But then let's look over the past 30 days. If I can click that correctly. We saw some, net call premium up here. That's 471,000 going up. So that stands out a lot. But following that, in, continuing the trend, we've just seen the stock price go down. And it's been a bleeder. It has. And I've noticed similarities between AMC, Mara. So, I don't think that it's good to say, AMC and GameStop moved together, for example, but I think it's interesting to note, hey, these stocks, they're in different sectors. Like Mara is a Bitcoin miner, and AMC both, have really bled the past month. And so maybe that's just different hedge funds, or the same hedge funds in similar positions, and whatever, there might be some volatility to follow. I don't know. But yeah, what we're seeing currently, it's not standing out relative to the past 30 days as being super exceptional. But there is some hope that we're getting into like a change of trend, that this could be starting to break out and that we may have bottomed. And like I showed in the chart, when we have put in all-time lows, especially when putting in bullish divergence, we have gone up notably. And so I think that we could be seeing that again here in the next month, maybe January of next year. I don't know. But I think that as bad as some things look, I think that some things actually look really, really good. And with that being said, I'm just going to go over a few contracts and talk a little bit about what I'm doing. Some of what I'm doing is going to lose money, and I might actually just start with that to get the elephant out of the room. And so this is the $20 call that expires in January, 55 days between now and expiration. The low on Friday was 1 cent. The high was 2 cents. So, you could have 2x'd there, but it doesn't mean you're going to get fills. And it looks like all the fills were at 2 cents. And so this is one that I bought a year ago, pretty much exactly at an average of, I think, 55 cents is when I first started to buy. This is going to come up in a minute. And this is $20. And at the time, AMC was trading around $5. So that's about a 4x. And this seems like it's going to go to zero. And I've accepted that. And so I don't think, this is one if you want to gamble. You could buy a few of these contracts at 1 cent or 2 cents, gamble $10 or something. It's gambling. That's what it is at this point, in my view, with this contract. But, maybe that's something one wants to do. That is not something that I want to do. And with this contract, Just to be clear with you guys, I got 50 of them. My average is 14 cents. So I'm in the red. I think that's going to zero. It's worth about 700 bucks. So I'm going to lose probably 700 bucks in January. I've accepted that. I can move on. Don't want to trade more than what you're willing to lose. And, I don't want to lose that, but I'll survive. It's not a big deal. And so what I've done is I've actually set a limit sell order at 5 cents. That was hit, on the, let's see, 21st. Oh yeah, 21st was Friday. I'm like, today's the 22nd. No, today's Saturday. So the 20th was Thursday, and the high was 5 cents. So maybe I could get a fill at 5 cents. But, if I scroll down 5 cents, and we can actually scroll out to or expand out, looking at the past 30 days, 5 cents is up here. Maybe I could get some fills there. I'd be getting, taking a loss on that. But rather than, let's pull up the calculator because I'm a nerd. Let's see. So if I got 50 of these times 100 times 14. Oh, 50. Oh, no, I need to divide by 100 because it's 50 cents. Or no, it's 50. Wait. I'm going to do this over. So I got 50 contracts at 14 cent average times 100 is 14. And so that's about 700 bucks. And so I might lose 700 bucks, but if I sell at 5, that's, let's see, 50 times 5, 250. And then I make that negative and add that 700. Then I'd only be losing 450. And I'd be getting back 250, which is more than zero. So that's kind of what I'm planning on doing. And the reason why I decided to do that, which I might regret, but I don't know that AMC is going to be at 20 by January. Maybe it wicks up to 20, but then gets rejected. And if it closes at 20, these contracts basically break even. If it closes at 21, that's 10 cents. Because it's 10 cents times 100 shares, that's $1, so 20 to 21. And that would not cover my 14 cents, the difference. So I need this to basically close at 34 on January 16th. I don't see that happening. I see this more likely going to zero, this specific contract. So if I take, 250 out, I accept a $450 loss, at least I got 250 to play with, and then maybe that could go into another contract. And one that I've taken an interest in, I actually bought this one, I guess more than 30 days ago, 45 days, more than that, 60 days, more than that, dang it, 90 days. This was at $1. And so that's actually when I entered this position at $1, and the low on Friday was 30 cents. What have I done the past few trading days? Last week, I bought a couple more of these to get my average down. And I should note this is the $5 strike call that expires in January of 2027. So January 15th. So a lot of time between now and then. But I will bring up something that I had mentioned. I just want to let you guys know what my position is, just so I'm being completely transparent. Small. I don't really plan on adding to it. But I've got 3 of them, and my average is now no longer $1. My average is now 55 cents. So I don't have to go back 90 days to get to my average. Let's see if I can go back 45 days. Yeah, I can go back 45 days. I could probably even go back 30 days. Yep, 55 cents right there. That's my average. So that to me seems feasible. And so might I add some more? I might. Especially if I sell some of the $20 strike calls that I think are going to zero. And so effectively, I'm just like rolling that position into this one. I'm not technically rolling it, but I effectively am, which is just like rolling from one contract to another. That's what that means. And you can specifically via your exchange roll into a different contract, or you can effectively do it like what I'm talking about. But yeah, I don't know that this one's going to go up. I don't know that this one's going to close above zero. It might go to zero. I have no idea. But also just to note that like a year ago, I was talking about the $20 call when price was at 5. So that's a 4x to get to break even. So let's just do the math there. Very simple. $5 times 4 equals 20. So that makes sense. And so let's just do that basic math with this one. $5 is the strike for next January. And let's see. Current price of the stock is around $2. Let's just say $2. Let's round it down. Keep this simple. So 2 times 4 is 8. So I do think that this could be going to 5. I think it's more feasible. I think it's more reasonable than, getting to, 20 now, thinking about it from a year ago. So I think this is a more conservative, but also, price is at 2 rather than 5. And so to get to where it needs to be, let's see, at $2, that's a 2.5x to get to 5. I think that seems more reasonable, certainly more reasonable than a 4x. So yeah, this is one that I'm intrigued by, basically accepting that I'm going to lose money on the $20 strike. And I'm sure that I could make more money if I were to sell at 6 cents or something like that, but I could also just lose it all. But I still wanting to be long in I think that this seems like a reasonable contract. Anyways, that's kind of what I'm doing with that. And then also with this other contract, I am not in this one, but this is a $3 strike call that expires in January. And with price, I don't know. I feel like I've wasted so much time and money on this stock and options. So I'm not in this one. It's a $3 strike call that expires in January, 55 days between now and expiration. Let's actually look at some of the shorter term data. What do we see? Maybe I'll zoom in on this. Because I think maybe this is a little more interesting for people's attention spans, and because I don't hold it. So yeah, let's just consider this. What's open interest done? I think that's an important tell. Generally, we've seen some red days, but generally it's gone up. And if we look at it from Halloween, it was around 40,000 contracts open. Now we've got 45,000. So that's a good sign. And I could scroll down more. Beginning of October, it was 33,000. So yeah, maybe there's something with this one. The low on Friday was 9 cents, which is $9. So like I was saying with the other one, you want to gamble, could do one of these contracts $9. And if it goes from a low from 9 and then up to the high in a day of 14 or maybe 6, I don't know that it's going to go back to 6 because that was like, all-time lows and stuff. But if it goes from 10 cents to 14 cents, that's a 40% gain right there. And it could just be a nice little swing in and out, in and out. Don't want to be too crazy. And then maybe you do enough in and outs that you can then hold some with house money. Or let's say gambling. I'm not doing this, I'm not encouraging it. But if one were to get like 10 of these, that's $90 at the low. And then to sell all but one of them at 14, you'd have made money. And let's see, let's actually do the math on that because let's see, $9, risking $9 times 10, $90. And then, okay, so $90. And now let's do 14 times 9, 126. So yeah, if you put in 90, you could take out 126, and then that's house money with the one contract remaining, and maybe it closes at 5 in January. I don't know. No idea. Maybe it goes up to 20, but then closes at 3. I don't know. That's something. And so, yeah, I just kind of wanted to share that perspective in case you guys are interested in it. But then as far as what I'm doing with shares, nothing too exciting. I had mentioned that my average is between $8 and $10. I do plan on trimming if it goes up there, but I plan on holding beyond that. I'd like to see if it goes up to 20 to 30, whatnot. But it depends on the move. But I remember exchanging with a buddy on X when it was doing this. and I was at break even, and I didn't even trim. I do I regret that? I mean, I'm glad that it happened so I have that experience, the emotional experience there, so I can remember that. I'm scarred by it. But yeah, I mean, if it goes up a lot and I'm in the green, personally, I plan on trimming. So then I could more comfortably, if it settles out, add back in. But yeah, I mean, for me, my interest, like this channel and stuff, I want to get better at trading, and that's not just focusing on one stock. That's doing a lot of them, thinking about the psychology, all of that. There's nothing worse than selling something that you love. But yeah, I don't think that now is the time to do that. I think that now is actually the horrible time to do that. And if one, wants to YOLO into it or double down, I guess, I don't feel like now is necessarily a bad time other than the meeting with the dilution. I think that's a concern. But the bullish divergence, the 7 count here, red weeks, I think that we could be seeing a volatile move to the upside. And with what we're seeing in crypto, GameStop, the stock market, a lot of panic across the board. I think that we could be seeing some big moves. And so I think it's good to have a plan for that. But what I've been doing with my shares, I do sell covered calls, but I'm doing that more conservatively now because I don't want them to be assigned and then I have to sell shares. And over the past week, what I've done, very unexciting. Let's see, just do this, and then I'll bring those back. What I've done the past week, so maybe I want to switch this over to the daily and then go over here. So there we go. What I've done over the past week is I've just added 1 share a day. And what I basically did is, okay, what was the low from yesterday? Okay, I'm going to place a limit buy order at that level. I'll buy 1 more share. So I bought 5 shares over the past week. Very boring, not exciting. But for me at this point, with how much it's bled, over the past 7 weeks, it's been nothing but red. I just don't know that it's worth it anymore. But I mean, I think that now is a pretty good time, it seems like, based on what the chart's saying, other than the meeting that's coming up. I'm concerned about that. But yeah, I mean, I want to be in a position where I can just hold and chill and or sell covered calls to kind of force me to trim out at certain levels in the way up. Removes the emotion. But at the same time, maybe if let's say I have let's say I sell a covered call with a strike at $3, right where the cursor is there, and price goes up to $3. And it's like, oh crap, it's Wednesday and we're above that strike. I'm going to get assigned at 3. I'm going to have to sell those shares. And then it goes up to 360, but then it gets rejected. And then it closes the week at like 260. And so it's like, okay, I didn't get assigned. So that's good. But maybe it doesn't just go up to 360. Maybe it goes up to like, 30. And then if I had those contracts, or that one contract, let's say, I don't have that now, but if I did at, $3, then, maybe it goes up way higher. And it's like, well, I don't want to get assigned at 3, but I could, trim at 20 or 30 or whatever it is. So I think it's good to not sell all shares as covered calls because they might go above the strike and then they might come back down. Or they might go way past the strike and not come back down. And then you want to be able to have shares that you didn't sell covered call on, which is going short. But that's hedging, and I think it's good for everybody to hedge or to have a plan to do that. But yeah, let's switch back over to the weekly because I like this chart. I like this chart a lot. I think that what we're seeing here, let's just zoom in right there. 7 red candles with some bullish divergence, macro bullish divergence going back more than a year. And, a price target that's potentially getting into the double digits based on some of this stuff, based on history and based on the fact that I think all of us are just so over this. But yeah, I don't know. Those are my thoughts on this. My next video on AMC might be a very different, whether that's very bullish or just completely defeated. I hope very bullish. But I just want to let you guys know that, yeah, I think that we're kind of at a turning point, and I'm hoping that it's turning to the upside. But with all that being said, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thank you so much for watching. Hopefully it's nice weather where you're at. Make sure you go out and touch some grass, enjoy time with family, friends, and I'll see you in the next one. Take care, guys. Bye.